A very quiet night for equities markets overnight, with the Dow Jones relatively unchanged on very light trading volumes. Traders were sitting on the sidelines waiting the FOMC meeting minutes. It seems that policymakers in the US were relatively divided over whether to remove policy stimulus early. Recently, the US Federal Reserve has purchased up to $600 billion of bonds to support the US economic recovery. The US job market has improved over the last 2 months, showing a large increase in non-farm payrolls over February and also March. Back here close to home, the New Zealand dollar traded relatively choppy overnight. However, when I sat at my desk this morning, it was relatively unchanged to when I left last night, sitting around 76.80 against the US. The Australian dollar also has found its support and resistance lines, trading around $1.03 against the US to $1.04 on the high side. In yesterday's Reserve Bank of Australia rate announcement, they did note that the high Australian dollar has been helping to contain inflation recently there. With high commodity prices internationally, the high Australian dollar has decreased the cost of importing the likes of oil for their consumers. An NZIER survey of business confidence showed that business confidence fell in the first quarter of this year. This was widely expected due to the fact that the 22nd of February earthquake has had a huge effect on our New Zealand economy. Of particular note, hiring intentions for businesses was very pessimistic. Although saying this, over the first quarter of this year, hiring did actually increase in the workplace. Also out yesterday was the Reserve Bank of Australia official cash rate announcement. As expected, they left their cash rate unchanged at 4.75%, once again noting that their economy was largely in balance. Also out yesterday was China coming out and tightening their monetary policy once again. The cost of borrowing and lending money in China has increased by 0.25%. What this indicates is that inflation pressures seem to be lingering around in China at present. Recently, they have been faced with food cost inflation of above 10%, and this is really impacting consumers over there. It was particularly interesting last night's auction, as it had been over 3 weeks since the last auction, and at this last auction there was 8.2% in the trade-weighted index for the Fonterra auction. Last night we once again saw a small decline, however this was only just above 2%. Of particular note, whole milk powder traded down quite sharply, and now over the 3 contract periods sits under $4,000 a tonne. Of particular note, however, the long-dated futures contracts, which is for delivery between October and December of this year, were relatively unchanged, and this is supporting our view that prices will remain quite stable coming into next season. Supporting the dairy industry at present is the fact that corn has pushed up quite strongly over the last period. Over the last 4 days alone, May and July futures contracts traded on the Chicago Mercantile Exchange have increased over $1. High feed costs are very supportive to our industry over here, because the fact that much of US dairy production is in factory farmed animals. They have to bring all their inputs directly to the cows, so obviously a high price of oil and also a high feed cost no doubt very much supports our industry over here. Into next season, we are still very optimistic about the payout conditions, and we are forecasting a $7 payout from Fonterra for the next season.